Good morning, ladies and gentlemen, and welcome to the show. Listen, I'm glad to have you guys here. Today is October 16th, 2019. Listen, guys, I'm caught between two cameras here. I got one camera the audio doesn't work on. This one, the audio works. But the picture quality is very poor on this camera. This is the camera I got rid of to replace with the one that the audio went out on. Anyway, I ain't worried about it. I'm doing my show anyway. Welcome to the show. Listen, let's get started. Let's take a look here, and let's open up the charts right here and take a look at what's going on. Gold. I'm going to read a little bit of this article here. It says, we've awarded dictatorial control over our money to a committee of unelected bureaucrats who conjure trillions of dollars, euros, yen, etc. out of thin air at their own sole discretion. Just a few days ago, the Federal Reserve announced plans to print $60 billion per month and loan it to the United States government. What value can money really have when it can be created from nothing and loaned practically for free to the federal government? And so, he says here, this is why after 5 centuries after Columbus and more than 5,000 years since it was first used as a form of money, gold and silver are still extremely relevant today. And yeah, this is very true. Honest to gosh, we're heading toward a crisis that's unparalleled in human history. Seriously, guys. And, you know, I get guys on my channel who sometimes say, well, can't this just go on and on and on? Can't they just keep printing money and maybe this will go on for another 10 years, another 20 years? What's going on? I'm going to do a show where I'm going to show you guys why this cannot continue on for another 10, 20 years. Why this is going to end, and when it ends, it's going to end abruptly. Going to end suddenly. And suddenly, people are going to realize the value in gold, silver, and now we got a new kid on the block. Cryptocurrency. Let's just read a little bit more of this. Think about it, it says. In the last fiscal year, October 1st, 2018 through September 30th, 2019, the U.S. economy couldn't have performed better. Corporate profits were at record highs. The stock market hit record highs. The IRS collected record tax revenue. There was no major natural disasters, wars, or crisis. Yet the national debt still increased by nearly $1.2 trillion, and the Treasury Department expects similar increases for this fiscal year and into the future. You know, with that kind of debt increases and adding that kind of money to the U.S. national debt, which is directly connected to the bond market, you see them all running into bonds. They've ran into bonds so bad worldwide that they've driven bond yields into negative yield territory. I mean, let's just reverse this for a second and pretend if they'd ran into gold like that. You know? Instead of bonds. You know where the gold price would be right now? Probably $10,000 an ounce. More. You know? It's absolutely ridiculous is what's happening in the world right now. It says, now the Federal Reserve is doing its part by cutting rates, printing money. Europe and Japan are even worse off with negative interest rates. Bottom line is there's no sound currency with strong midterm fundamentals. Okay, I want to stop him on that one just for a second. It says, bottom line, he says, there's no sound currency with strong long-term fundamentals. Well, the new kid on the block, cryptocurrency, does have strong long-term fundamentals. I know a lot of people are going to argue with me about that, but it does. It's very limited in supply. It's mined like gold. That's a new kid on the block, though. Now, we got gold, you know. It says here the central banks are buying literally tons of gold. But you know what's happening? Reading a little bit further down in this article, and he says what's really interesting is the gold supply. He says the mining companies pull the gold out of the ground and gradually deplete their mines. They have to constantly explore for new gold deposits or acquire other companies who have found gold deposits. But that isn't happening. Over the past 6 years, the average mine's remaining production life has fallen more than 30% worldwide. And you know what? I'm going to tell you what. If you think this is bad with gold, it's even worse with silver. And silver is being wasted. They are quite literally, with new mining techniques and new production techniques that they have now, they are quite literally stripping the world of silver. And it's being used in industry, being used for electronics and stuff. And where does it end up? In the landfills. I'm going to tell you guys, the United States Geological Survey did a survey on silver just a few years ago. And they came to the conclusion that silver is going to become so rare into the future that it is on, like, if it was an animal, it would be on the endangered species list. Quite literally. And, you know, there's an awful lot of things that they cannot make without silver. So silver's even worse than gold, and gold's bad. We're going into declining supplies. These mines are just stripping it out as fast as they can, and they don't have enough money to go after and find new deposits like they used to, because the price has been suppressed for so long on gold and silver. Absolutely the strangest time we've ever went into in our lives here coming up, where the world is facing a crunch time. Let's take a look at the silver and gold price today and see what it's doing. You know what? We see silver price down 5 cents today so far, but it's been down lately, and it's getting down low where it's going to go below $17 if it keeps on. But it's trying. It's really trying. Gold and silver both right now are really trying hard to consolidate in a price range. Silver's trying to consolidate at $17.40, but it's having a hard time holding $17.40. And if we take a look at gold right now, we can see gold is trying to consolidate at around $14.90, you know? But we see gold's having a hard time too. Gold says it's up $4.60 on the day, but in actuality it's down. Now is very possibly, I mean, you have to do your own research into this and stuff, but in my mind, this is creating a buying opportunity for gold and silver. Gold and silver's never looked shinier as far as I'm concerned. Let's move on down and take a look at the cryptocurrency market. 1 second, guys. Wait until that siren goes. Okay, let's take a look at the cryptocurrency market today. Cryptocurrency is suffering too, which is creating a buying opportunity. We refresh the page here. $217.7 billion, and we see most of the coins are down right now. You know, you can get a litecoin for around $50, $52.80 for litecoins right now. I think litecoin is one of the biggest values in cryptocurrency, as far as I'm concerned. You know, if you're going to buy cryptocurrency, I think you should take a serious look at litecoin. I think litecoin is undervalued in the cryptocurrency market. I think in time, you're going to see Litecoin and Bitcoin standing 1 and 2. What does that mean for Ethereum? I think Ethereum's probably going to be number 3. XRP, I think it's going to be like number 18. I don't like XRP. I never did. I think it's not a decentralized coin. It's centralized, and they're holding 50 billion of them in escrow. That's the biggest thing I don't like. The circulating supply right now is 43.1 billion, but there's 50 billion of them held in escrow. I really don't like that. That's why I don't like XRP. All along, that's why I didn't like XRP, and it's why I still don't like XRP, is because of those 50 billion coins they're holding. I can't get over that. That bugs me. Okay? Bitcoin Cash, 219 billion. I mean, I like most of these coins, and I'll tell you a coin I think that's underrated, you guys, this morning, is Monero. And Monero's really cheap right now. $52.74. Now, that's just my own opinion. That's not financial advice or anything like that. One of the reasons I like Monero is the fact that it's a very secure coin. You know? Secure, what I mean is that you can send Monero and it's not real traceable, you know, and stuff like that. It's got a lot of security features and stuff, you know. I like Monero. I've always liked Monero. It's one of my favorite coins, you know, right up there. I mean, with a few others that I really like, but I like Monero, and they're cheap right now. $52.74 a piece. Anyway, let's move on. We got a lot to talk about. Here's the Dow today. It's, let me refresh the page. It's down 14 points on the day. If we go back and take a look at the last 5 years for the Dow, we made a peak on January 22nd, 2018 of 26,616 points. We really haven't went anywhere since then till now. We've just been going sideways. And that's with the central bank switching from monetary tightening policies to monetary easing. And the Dow hasn't went anywhere. This bodes very badly for the Dow Jones. The fact that the Dow Jones is not going up right now, with the Federal Reserve going back to monetary easing. And in a big way, too. They're going back to monetary easing. Let's take a look now at crude oil. See, crude oil price is 50, let me go on the 5-day chart here to get a better look. We can see a depressed crude oil price, $52.87 for sweet light crude. And now U.S. Treasuries. And what we're seeing with U.S. Treasuries is falling yields, except for the very end of the yield curve on the U.S. 30-year, which is rising. Which is kind of unusual. But, you know, Treasuries have been doing this thing where one day they go up, one day they go down. One day they go up, one day they go down. But we're looking at 2.25% on the 30-year and 1.76 on the U.S. 10-year. Let's take a look now at the dollar index, 98.19. And we see the dollar index falling just a little bit. You know, it was up to 99 there a week or two ago. Now it's 98.19, so it's lost a whole penny. They want to weaken the dollar, you know. Now let's take a look at this article about China, and you know this is very important. The Chinese are undergoing a slowdown right now, a massive. It's not a small slowdown. It's a massive slowdown in China, and one of the things that they're doing is. Well, I'll read a little bit of the article. It says Beijing, and that's talking about China. Beijing's decision to allow its currency to offset the pressures from the trade war has been one of China's key survival strategies. They've been weakening their currency, which is the yuan. And it says it's China's key survival strategy so far, but with increasing signs that the ocean of capital sloshing around behind China's dike is finding new cracks, and out-of-control domestic food and price inflation adding to the stakes, that strategy is looking riskier. The second one is that with capital already fleeing China, any further attempts to boost China's economy using monetary policy will be promptly punished, which also explains why the world is sinking into recession. As a reminder, in a world where China has been the primary growth dynamo, thanks to its tremendous credit impulse after the financial crisis, this massive credit creation mechanism has now shut down. And, you know, I'm going to show you, take a look at this chart. I'm going to hone in on it for you guys, because this chart's very important. This chart goes back to the year 2009. We see this huge spike up in 2009 where the Chinese basically borrowed voluminous amounts of money. See this first mountain here. back in 2009 after the world's great financial crisis. This is when they built all the ghost cities and stuff like that. And they spent money like crazy. They spent money so much on infrastructure programs and everything else you can imagine that they boosted the entire world's economy out of the recession. Or they created what we call I would call the false recovery in the world, but it was a recovery to a certain degree. That's this huge first mountain. You can see they did it again in around 2013, and they did it again in 2016. These three big mountains that they created of credit. This is what's been driving the world economy. But you can see this last little mountain on the end here, the fourth little mountain is so tiny. Now, if you guys are into reading charts, and you take a look at this chart, what we see is a downward trend. We see a downward trend in Chinese credit. In other words, they're not doing the massive amounts of credit that they were doing. In other words, borrowing against the Chinese national debt, you know. This slowing right down is coming to a stop. In fact, now it's starting to go downhill. You can see this chart is a down-sloping chart. In other words, the credit's being cut off. And they can't get it started again. And this represents a huge problem for the entire world economy. This is part of what's sliding us into this recession. It says, as Beijing runs the risk of an out-of-control capital flight, should it push too hard to stimulate the local economy at the expense of another sharp devaluation in the yuan? In short, whereas the official data does not show it, reading between the lines suggests that the global economy may be on the verge of collapse. And I totally agree. I think China is going to become the biggest driver to move us into this global collapse that we're coming into, because China's the biggest economy. The United States economy is still perking along, but I see a bad signal that's come along quite recently. Consumer confidence is starting to wane. And the second thing is I'm having a brain fart, guys, but the service industry, you know, it's been a holdout. It's showing signs of weakening. The United States economy is very slowly, and it's the only economy that's being the last holdout in the world. And, you know, we've seen huge capital inflows to the United States dollar. The United States economy is finally getting ready to start to roll over. And as everything rolls over at once, we're going to see these credit-induced bubbles that have been created start to burst. You know, you've heard that expression, the everything bubble. It's going to start to burst. And we're heading into a period of economic uncertainty that's going to create huge demands for gold and silver. Ultimately, there's not enough gold and silver to go around, especially silver. Listen, guys, you know, you've heard a lot about gold lately, and you seem to forget about silver. Silver is the biggest weak spot. Silver is what's really going to go up big time. Multiples in price, you know. Focus your attention back on silver, guys. Real physical silver you can hold in your hands. I can't begin to tell you what I think, my personal opinion, of how many multiples silver is going to go up in the very near future. You guys have a great day. Give me a thumbs up, and we'll catch you guys in the next show. Bye-bye.